We're ready to start. Thank you everybody for joining us. It's a pleasure hosting this event. We are just about to wrap up 2020 in tech and look at the year ahead. Chemi of Pitango and Gilad Shany of IO Crossover Partners will help us to do so. And we will discuss the past year and what 2021 is expected to look like. We will cover investment trends, segment that were very successful and segment that shrank dramatically during this pandemic. We will speak about challenges and most importantly, future opportunities. I would like to invite you to ask questions. Please do so at the Zoom chat and we will present the question in the end. Hi, Chemi Perez. Hi, Gilad Shany. How are you?
Hi, very good.
Good, thank you.
Okay, I would like to ask all the rest of the participants to mute yourself so we can hear Gilad and Chemi. And again, the questions will be asked in the end. I would like to start with the bright side of the past year in tech and specifically in Israel. A look at Israel's tech scene reveals a significant increase in Israeli startups, overall capital raise, and the highest number of Israeli unicorns ever. And I'll start with the unicorns. Please mute yourselves. Please mute yourselves so we can hear everybody else. I would like to start again with the bright side. We see a significant increase in Israeli startups, overall capital raise, and the highest number of Israeli unicorns ever. And I'll start with the unicorns. Many Israeli companies, more than ever before, raised funds at a valuation of more than $1 billion. Gong, Monday, Next Insurance, Via, and Pitango, and much more. Gilad, what is your explanation for this?
Thanks, Noah. Yeah, listen, I think before COVID hit and still after, we're looking at capital raises in Israel, and we've been on an upward trend that is not that different than what we've seen in Silicon Valley for many years. Companies stay private longer. They raise more capital in private markets. They go after solving much bigger problems. They go after much bigger markets. And in this context, the Israeli ecosystem has been really strengthening over the last 10, 20 years, both on the capital formation side and also on the talent and the management side. And I think that when we look at what we're seeing, VC investing and growth investing together has been around $1 billion to $2 billion over a decade ago. I think this year we're at a pace of over $10 billion. That's an order of magnitude change. The funding has predominantly came actually from out of seas. When you look at the big numbers, 85% of the funding is coming from overseas into Israel. And one of the worries was that once COVID hit, we'll see this funding source dry up. And actually what we've seen is that was a little bit of a shock, but immediately recovered. People realized the value in the Israeli ecosystem and they continue to invest, and even more so, even the days after Corona. I think many of the companies that we talk about in the ecosystem in Israel playing exactly into the same trends that we're going to talk about later on, I'm sure, digital transformation and others. And that's the reason I think they attract the capital. And that's the reason we're seeing a strengthening of the ecosystem that we're proud to be a part of.
Chemi, what's your take on the numbers?
Yeah, I would probably add to what Gilad said, probably three things. The first one is that during the last decade, with the evolution of the internet and automation and data, Israel stopped being an island and actually started to sail the ocean like any other ship around the world. So we leveraged the internet for marketing, for sales, for distribution, and it really allowed us to unleash the potential on a global basis and not just innovate for global enterprises that set up a shop in Israel. So as a result, there was a significant cultural change from innovating for exit to innovating for growth. And that trend yielded in increased amount of funding for Israeli startups. 2012, I think we saw about $2 billion, $2.5 billion a year. And this year we get to about 10 billion. So most of the money is going to fulfill growth. The second thing I would say is the fact that there is a global shift of capital from liquidity to growth. Since interest rates are very low, people don't find the great asset classes to generate returns. And by far, technology is becoming the source of value. We see that the greatest companies in the world are technology companies. They're growing, they have the fastest growth. And so there is a global shift of capital from liquidity to growth. People are willing to give up on liquidity as long as they invest in assets, sustain significant growth. That also allowed us to attract significant amounts. And I think that given COVID-19, all those trends are expedited because lots of people really adopted new technologies and innovation. And so the willingness to buy more technology and to use more technology on a worldwide basis has grown significantly, whether it's e-commerce, e-learning, e-health, or work from home or other walks of life.
Chemi, do you think people are willing to take more risks because of the low interest rates and perhaps know better or not good enough investments? And you know, many people believe, and I'm saying it very cautiously, that we are in the beginning, or not even in the beginning, of a bubble when it comes to technology companies, or this is still smart money going to smart investments, but in a wider way.
I think that the markets are correlated. When the stock market is heated and companies are seeking for IPOs and sustain significant growth and value, it carries with them also the seed and early stage markets. So people are willing to, it's not, in my view, it's not risk, but they are willing more to invest also in early stage as they see the outcome, and they say to themselves, had I been investing in Lemonade or Next Insurance or Via or other companies in very early stages, I would have significant equity position and therefore create significant value. So the markets are coupled.
I would like to just share my screen and show a little bit the numbers as they are so far. And we see the capital raise is at all times record for Israeli startups. And again, you can see on the screen that the amount raised at 2020 increased by more than 20% to almost $10 billion. And again, Gilad, with the unicorn that we see, you know, isn't it an anomaly in a way that in such time of uncertainty, we see so many Israeli companies becoming unicorns and the capital raised soaring so much?
Yeah, I really don't think, I think there's many sustained trends here. This is not cyclical, this is a secular shift. What we call Silicon Valley is here to stay, it's not going anywhere. The ecosystem is strengthening and we're seeing really a virtuous phenomena of success. And I'll give a few examples. When you look at the industry in Israel, if you really think about the industry in Israel, and Chemi was one of the players in the industry in Israel, it's really started only 30 years ago with Kranot Yozma and, you know, the initiative by the Israeli government to stand behind the ecosystem and really kind of bootstrap and start the industry of investing in technology. When you look at the same industry in Silicon Valley, they have 20 to 30 years head start over the ecosystem in Israel. So when we look at that from that perspective, we understand that we're again following similar trends. And when you look at the average Israeli entrepreneur in the tech bubble, in the last time we saw a bubble in technology in 2000, they were poor, they were looking for exit. When an Israeli founder had 5% of a company and this was offered a $100 million check size, he said, great, I'm going home and I'm gonna pay my mortgage. Well, look at Israeli founders today, sometimes they're serial entrepreneurs. They sold a company before, they worked at a large multinational corporation and succeeded. They made an exit and suddenly they can run for the long term and they can play the long game, right? So that's number one, a very big phenomenon of gaining the managerial expertise by selling a company to a multinational and then getting out of it and saying, you know what? If I operated a large division at Amazon, Facebook, Google, Microsoft, I can actually start on my own. We just saw a great example, you know, Asaf Rappaport, who started Adalon, sold it to Microsoft, managed the local Microsoft site.
Just raised $100 million recently.
$100 million round in a company that was just started 9 months ago, right? This never happened before in Israel. We didn't have those kind of entrepreneurs that at a very early stage, they already made an exit, they already gained some experience, they already had managerial expertise with a big multinational corporation, and suddenly they know also how to tap the capital markets in order to provide the fundraising that they need to bootstrap their company and to launch it forward at a much faster pace. So I don't think this is an anomaly. It will fluctuate with the market, don't get me wrong. Like if we at a certain point are gonna get a correction in the market, the flows of funds are gonna dry out everywhere, including in Israel, in Silicon Valley, and in other places, and then they're gonna return. So this is not something we haven't seen before. I think the trend is here to stay.
So it's basically Israel technology and Israeli innovation becoming more matured regardless and despite the pandemic, and even though the pandemic could stop this progress of Israeli tech at these times. It's just a process that would have happened anyway and wasn't slowed down because of the pandemic.
Yes, but I think Chemi also hit on a very important point. In a way, the market came to us. Israel was always weaker on marketing strategy, sales strategy. When you need to hire that salesperson who will know how to go to the NFL game and take a booth and close a sale with the CISO of Bank of America, that was kind of a US expertise. We're an 8 million, 9 million people country. We don't know how to think at a 300 to 400 million scale, right? We think at much smaller scales. So that was a disadvantage. And we're 7 hours away and we're across the ocean away. So we really need to move to the market in order to penetrate it. When the world is going digital and the world is going internet, right? We don't have that barrier anymore. Think about companies like Monday that got to $100, $150 million of sales with 0 salespeople. The advantage of the Israeli ecosystem is in these exact science, knowing how to do internet marketing, digital marketing, big data science. This is where we're strong. And the market suddenly started selling using these methodologies. So the sales format of sitting in a game and closing a deal over a couple of drinks is not there anymore. It's all done online. It's all done based on bits and bytes, on buying cheap and selling high, etc. And this is where we're strong. So in a sense, the market came to afford it. Marketing turned from an art to a science. And that's exactly where we're strong. And that's exactly where our companies excel.
Chemi, your take on the numbers we've just seen, 20% up capital raise, 2020, we didn't even finish the year, might be higher.
It will continue to grow in my view. I think that what we learned is if 10 years ago we were divided geographically, now the world is divided between physical and digital spheres. So it's not, the borders are no longer important. What is important is your ability to leverage the digital sphere. There's so much limitation on the physical layer, and COVID-19 has showed us very significantly that everyone became sort of an islander, but we continue to collaborate digitally. And this is exactly the strength of Israel, and we leverage the digital sphere as much as we can. Bear in mind that the markets are much bigger now, that people know how to use technology, and the demand for technology is on the rise. Bear in mind that you have companies with valuations of trillions of dollars. Bear in mind that in every country now, the leading companies are technology companies. So it's definitely here to stay. And as Gilad said, there might be, the market is not always correlated in terms of valuation. Another thing I would say also to notice is that through the years, Israel behaved in many ways like Silicon Valley, with 2 differences. One, we were lagging in time. And secondly, if you compare it to waves, so we are a little bit on a time shift behind, and the amplitude is always a little bit lower, but constantly we're closing the gap. And part of the reason is because the world is becoming more digital, and it's not important where you sit or where you start your company. But that's not the only thing. And I relate to what Gilad said. The fact that Silicon Valley started decades ahead of us was very important for them, because it takes time to build an ecosystem, to build knowledge, to build tradition, to build connections, to create second and third time entrepreneurs, to create a VC community that is more I would say, experienced. It all been built up, and constantly we're closing the gap.
I would like to move to the more gloomy piece of the situation. And the gloomy part of reality is that alongside the tremendous increase in overall capital raise, the later rounds are those attracting the highest amount. And there's a significant fall in investments in seed stage companies. According to the IVC report, seed investments fell by 80% to a median investment of $150,000 compared to $100,000 last year. The reason for this seems to be clear. The traditional seed investors prefer probably to stay away from risky asset class. And I would like to ask you, Gilad, how significant this reality is, and how much is it important to the ability of technology and innovation to evolve in the next few years?
Yeah, I think we're definitely seeing some level of consolidation. Obviously, Chemi is a much bigger expert on the early stage than me. I'm dealing with later stage investing. And I think for us, it's very important to see continuous innovation, continuous investing in the early stage. That's the cohorts, the early stage of today is our cohorts of investing in 3 to 5 years. So we're definitely very, very focused on that. I think it's also fair to comment about this, that you look at the average seed stage and early stage rounds, they're much bigger today because of those phenomena that we were just mentioning. So again, it's just another maturation of the process. When you see a serial entrepreneurs who are coming in with good business plans, they've seen a business before, they've seen what it takes to get it off the ground, and they're coming with big ideas, going after big markets, good business plans, good teams, it's much easier to deploy more capital around those ideas than to go after smaller ideas, smaller markets, less experienced entrepreneurs. And we're seeing that level of consolidation. So that's one of the reasons we're being pushed to that. Another reason is the heightened activity of multinational corporations in Israel, which again has benefits and advantages, but also disadvantages. When you have companies like Microsoft and Google and Facebook and Apple offering very, very high salaries to some of those talented employees in Israel, there's some level of disincentivization of taking those young entrepreneurs and letting them out starting on their own. On the one hand, sometimes after enough years at a large corporation, it will allow you to build a balance sheet and in a sense, de-risk your plan because you have less risk in going out on your own. But on another, it's very tempting to stay with the golden handcuffs. So there's some kind of a put and take with that phenomena of multinationals getting involved more and more. And the last is, I say, it's again, the global phenomena of everything we're seeing from the top, very, very top. When you look at the top 10 companies today in the S&P, vast majority tech companies, very fast moving and consolidating big industries. So you see that consolidation starts all the way from the top, which are the multinationals who are involved that I mentioned before, to the bottom where you see bigger plans getting more capital and smaller plans getting less and less capital. So I think it's a natural thing that's happening. Obviously, it's ebbs and flows, and I think the pendulum will swing. We need to make sure it doesn't go too low where we kind of dry out the well. But I'm not worried. I still see very, very talented entrepreneurs going with very big ideas. That's one of the discussions we just had before everyone joined was about one of these entrepreneurs who is starting now something really exciting. And I think we still have a long way to go before we see that real buyout.
Chemi, would that be possible for Israeli and not only Israeli tech and innovation-driven companies around the globe to keep growing and developing with early-stage startups not being able to be well-funded?
Yes, I think we need to understand why 2020 was weak, and I was quite surprised to see the numbers. Actually, when I gave it a little bit of thinking, it's not surprising. First of all, we had a crisis the beginning of the year. Naturally, what people do in such situations, they stop investing in general and they start protecting their assets. We focused on our portfolio companies. We wanted to make sure that they are set to cross over the pandemic, that they have enough runway, that they have enough cash. So many investors were very busy with what they have. Secondly, when we moved to work from home and work remotely, it was initially very easy to continue things you already started, right? So if you invested in a company, you can convene on a Zoom and continue discussions. But if you need to invest, if you want to invest in an early stage company and you cannot see them, you cannot feel them, it's very hard to start new things. In general, I think the world is going to change in such a way that new things will start most likely physically, and there will be some things that will start digitally also. We made an investment in a company that we never met before. Actually, they are based in Silicon Valley, early stage group, doing amazing stuff. They don't have offices. They actually work from home all over the world. They recruit on Zoom with references, but we couldn't do it at the beginning. So by nature, the first half of the year was a big drop in making new stuff. Slowly, we started to get our act together, started to understand how to work. We understood that the pandemic is here for the long run. And all of a sudden, we discovered that you can actually also do M&A on Zoom, and you can raise money for your funds on Zoom, and you can make investments on Zoom. Another thing that happened in the pandemic, at least on our side, or at least on my view, is that I realized that there was a question in the air that never had before. When I see a company, my first question now is this company going to be resilient if we're going to have another pandemic? The physical disconnection, companies in the travel business or companies in the hosting business, they need to have a digital component. So the question was, do you have a business that is resilient? And lots of the startups were just not resilient in their proposal. Therefore, they could not get funded. But our appetite to early stage has never been higher than before, because we think that in the next decade, the demand for technology, for data, for platforms, for efficiency, for resiliency are going to be on the rise. We need much more robust networks. We need much better aims of communication and collaboration. We need better digital health. Actually, the whole world is now moving into a new stage in their digital transformation, and many new participants are coming into market that were not really planning on being part of the digital sphere. And a new type of companies are going to be born in this decade. And I believe they're going to leverage the digital sphere in a phenomenal way. So just so that you know what we decided to do in Pitango, we actually work as one partnership, but we have now 3 dedicated funds that work in parallel. One is focused on the digital transformation of the healthcare market, which is the largest market in the world. The other one is focused completely on seed and early stage investments. And the third one is focused on growth. And we believe that in these 3 areas, there will be fantastic opportunities in the next decade.
There are some early stage founders, entrepreneurs that are here with us, and I would like to ask for tips from you. What are your tips for startups looking to raise capital at seed stage? What's the way to be able to be successful raising capital at seed level at this time?
Gilad, you want to go first, or shall I start?
I think seed, you should start, definitely.
Okay, I will start. So in Pitango, basically, we have 5 criteria that we try to follow. We call it 4 T's and I. The 4 T's stands for team, theme, technology, and terms. And the last one is I, which is impact. This is something new. We believe that innovation will be driven not only by necessities, but also by purpose and values. As a matter of fact, the young generation today that we see cares about the environment, they cares about society, much more than previous generations. And I think that, for example, Israel is, I think, very strong in militarily or economically. So what will drive our innovation going forward? I think a lot of it will come from values and purpose. So first of all, we'd like to see a very strong team. More than before, I think what differentiates between companies is the capabilities of the founding team. that they are resilient, that they are adaptive, that they are leaders, that they can navigate through a very complicated world. Secondly, theme. We want to see a big theme, a big market, because you cannot grow a startup company and compete on all the resources, the talent, the funding, if you don't have a big story. So the story needs to be very significant. In terms of technology, we believe that a company that is not using technology in a smart way will be taken by a competitor. So we'd like to see strong technology, even though it's not always about technology. Still, we want to see data, we want to see the play of technology. And of course, terms, they need to be something that we believe we can make money on the investment. The impact is something that Pitango is doing something very unique these days. Instead of raising a fund that will focus on impact or sustainability, we decided to transition Pitango into an ESG fund. And we have two strategies for this. The first one, we call it migration. We take our more advanced companies that already build a business, and we work with them into becoming ESG companies. Our first company that is going through this process is a company called VIA, which is doing public transportation. Their ability to impact people and to impact environments are significant, and we want the company to positively impact everything that they do, and they work with us very closely on that. So we call it migration. There's hundreds of millions of dollars who are already invested in these companies. Let's make them impactful. Let's not wait. The second one, we call it native impact. We're looking for entrepreneurs who are looking to make an impact, but they are still in early stage. And instead of them going to impact funds, we tell them, come to mainstream VC. We think like a VC. So we want to build technology companies that are successful. But we love the fact that you have an impact in mind and will help you build a company in such a way that will allow you to continue and be impactful as you grow the company in early stage, which is more difficult for companies to do when they have to fight still on the creation of the company. So so I think if you're going to raise money, make sure that in today's world, make sure you're going after a big market, make sure you use technology, make sure that the terms fit what you plan to do, and make sure that your company is responsible and impactful. Over time, I think companies will not be able to be acquired, or they will not be able to go public if they will not comply with ESG. I believe that in the next 10 years, we'll see more regulations, and it's going to be a showstopper. So we decided to step in earlier than wait for the market to catch up the market.
Gilad, do you want to add on Chemi? What are the tips for young and early stage? When you say early, we say seed, because the A rounds are not down, still good numbers with A rounds. Do you have any tips for really beginning startup needing to fund themselves these days and would like to do it successfully?
You're on mute, Gilad.
Yeah, Gilad, you're muted.
Sorry on that. I think what I was starting to say, the same tips I would give to anyone looking for a job interview or on a job interview or looking for, when they start a relationship is mainly two things. Number one, close the gap between the way you perceive yourself and reality perceives you. I think when you come in with a plan,
that's good.
As this gap is narrowest, this will best position you in the conversation with anyone in front of you, right? It's not healthy to be below, it's not healthy to be above. Try to narrow that gap, right? Perceive reality as it is and try to be realistic on the one hand, but a big dreamer on the other. And the other part is people. At the end of the day, it's relationship. Early stage investor is more than a Catholic wedding. You're going to be with that partner, fund, whoever is going to be your partner for the journey for many, many, many years. This is a very long-term journey. You need to feel comfortable that that person is the right partner, the same way you feel when you're going into marriage. And that partner needs to feel the same level of comfort with you. And I think until people realize that this is really, at the end of the day, a people business, they'll make a lot of mistakes on the way, because they'll talk about everything else other than the matter that is the heart of the issue, which is there a fit here? Is there a connection here? Can we help each other? can we make this dream happen together? And I think that's what will make this happen. So at the end of the day, it's people, relationship, reality, perception. Close those issues and everything else will follow. Of course, you need to have all the great technology and a big plan and a big market, and that's kind of table stakes. But I think without the personal aspect of things, it will be very difficult.
Okay, the other component that were significantly affected are mergers and acquisitions. I'm sharing my screen for you to see mergers, acquisitions, and IPOs, where we see a decrease of 46% from overall deals of more than $17 billion in 2019 to around $9 billion in 2020. Gilad, what is the reason for this, and what is the long-term implication of this?
Yeah, I think the world as M&A has shifted together as well with what we're seeing in the public markets and what we're seeing with companies going after. There are a few phenomena that are happening at the same time. Number one, as we said, the appetite of the local investors and local entrepreneurs have grown substantially. People today, 10, 15 years ago in Calcalis, which is the local version for those who don't know of the Wall Street Journal or Globes, or I don't want to insult anyone else, all the
Be careful
papers.
With this, the market.
Exactly,
let's
exactly.
name
The
everybody.
market, everyone,
Geek
exactly.
time, yeah.
Exactly, geek time. But 10 years ago, 15 years ago, a headline that says, $100 million exit, we're selling our company to Microsoft, would have been an amazing achievement, would make headlines in Israel. Today, when you read a headline of, and it's not a headline, it's probably a subtext, someone sold the company for $100 million, the first question is what went wrong? Because they probably didn't do so well. And it's just a shift in the mindset, right? So when you think about these companies building themselves for the long term, trying to build billions of dollars of equity value, it's clear that there's less appetite on the seller side. On the buyer side, the same companies who used to be the natural buyers in Israel, some of them are still very active like Intel, but some others are not so much anymore, like Dell EMC, which is an industry that consolidated and now is more cash constrained. Cisco, an industry that is more in the process of consolidation and is less active. Some of those natural buyers are not necessarily the companies that stayed at the top. When you look at the companies that are at the top now, the giants, the Microsofts, the Apples, the Google and Facebook, for those type of companies, if you don't acquire something for multi-billion dollars price tag, it's irrelevant. It's not meaningful. It doesn't move the dial. Usually it's like $100 million is an equi-hire. You're trying to hire the team. We're not really paying for the business. And so I think all of those trends together are creating this phenomena where there's a little bit of a lull in the M&A market. You're kind of digesting that. When we get to the other side of it, I think what we'll start seeing is some of these strategic acquisitions, the multi-billion dollars acquisition. We saw some of them. Waze was the first one, but just recently this year, we saw Move It being acquired for almost $1 billion by Intel. Habana Labs was a $2 billion acquisition by Intel. So you see those mega $1 billion acquisition. I think as these companies starting to build and as the giants are coming and deepening their presence in Israel, you might see more of these multi-billion dollar acquisitions. So on an overall basis, it will be the same phenomena that we see in fundraising. The numbers will go back up. The numbers will be higher even again, but the number of deals will be smaller. Much bigger deals, but smaller amount of total deals. And I think that's the phenomena we're seeing. And we're kind of in the middle of transitioning from a lot of small deals to maybe less deals to less but very big deals. And I think we're kind of in that process.
Chemi, what's your take on it?
So I think, first of all, I agree with what Gilad said, but I think the following. First of all, the public market is heated and it offers great valuations, and successful companies aim now to go public because that could be the biggest return they can achieve for themselves and for their investors, especially when you see Israeli companies traded at valuations above $10 billion, from Checkpoint to Wix to SolarEdge. You see the rising stars coming up now, Lemonade and others. So usually when you have such a receptive stock market, entrepreneurs by definition aim to go public and not to sell the companies. Secondly, there has never been a better time than today to really scale your business and sustain growth. The availability of capital is tremendous. And so selling your company might be sort of a compromise, Most companies that I'm sitting on their board prefer to continue and grow. They see a huge market opportunity. They see the ability to raise significant amounts. So why sell your company? But at the end of the day, we have to remember that at some point in time, companies will start consolidate. It's a natural process. Also, when you see at the stock market now with the rise of SPACs and direct listing, and of course IPOs, it's a very vibrant market. So entrepreneurs really want to build big companies. And when they see young entrepreneurs building significant companies, they are becoming the role model and not those who sold their companies to bigger companies. So it's an evolution of the mindset. It's an evolution of the opportunity and evolution of availability of capital and scale in a very short period of time.
Okay, thank you. Let's look
And
at the...
just having said that, bear in mind that Mobileye was acquired for $15 billion and Mellanox was acquired for $7 billion. So there will be consolidations and M&As.
And we see this in the end of 2019 on the right with the 8.8 billion, and with the $3 billion quarter four of 2019 and $4.5 billion of deals at the first quarter. But overall, you don't think it has to do with the pandemic. It's just a cycle that is happening anyway, regardless of the pandemic, of companies growing, and then for the deals to be happening. I would like to move to the next slide and speak and look at the investment trends and segments the past year. And we see that cybersecurity, fintech, digital health, agriculture technology, e-commerce technology, those are still, like in 2019, are very strong. And we do see that cybersecurity capital raise increased by 40% in 2020. We see an increase in e-commerce technology, not surprisingly. And we see also smart mobility via and alike. And this means that COVID-19 related segments like e-commerce and digital marketing were positively affected, but also segments like smart mobility that are not connected to the pandemic were also positively affected or grew significantly. And Chemi, what are you seeing at the market right now? And most interesting, what are your expectations for 2021 as to trends cooling down and new trends arising?
So one of the trends that we see a lot is developing technologies for developers. Developers of technology are becoming now significant market opportunity for many companies because they are making a difference. They are building the new technologies. We've seen some significant number of companies going public with significant valuations. So everything that relates to DevOps is of course significant. And everything that is associated with data, whether it's on the security side or the enabling security side. I see going forward, of course, it makes a lot of sense what you show here in terms of fintech and digital health and cybersecurity. Those are things that will be even enhanced going forward with the post-pandemic world that we're gonna see. But I'm very intrigued by the new frontiers of technology, such as quantum computing. Pitango started to invest in quantum computing. I think it's going to change the world in orders of magnitude with regards to everything that we did before. And in terms of technology, that's probably the technology that I'm most excited about, because it's going to change the world of compute and communication. We are also investors in artificial intelligence a lot. We're investors, for example, in AI21, which is a company founded by Professor Yoav Shoam, and we had Professor Amnon Shashua joined us. There's so much to do with AI that has not been done. By the way, last week I was in Dubai and I met with the Minister of Artificial Intelligence, a young guy, 30 years old. I was quite impressed with their comprehensive approach towards artificial intelligence. So the one thing that is missing here that I think will grow, and they are hiding on the left side, I think food
Food
is going
tech,
to
yeah.
grow significantly, the way we feed people. And I think also education will start to rise, because the way we educate kids at school today is unacceptable. It's a big barrier for the economy. I think everything that will contribute to resiliency and productivity is going to grow next year, because bear in mind that we have a huge economic crisis to recover from. And right now, countries are printing money like there's no tomorrow, but somehow we'll have to recover from this crisis. The only way in order to recover is to be much more resilient and much more productive. And I think technology is a solution. And therefore, I see that additional areas will also join the bubbles here on the right side.
Gilad, what are your thoughts?
Yeah, I think if I take this off the exact question for a second and talk about what we're seeing here, I think the interesting phenomenon is really to see what's happened to Israel. If you look at the 90s, Israel was really strong in communication equipment, right? And the reason was, again, the IDF was always kind of a great bed for great ideas, right? We were, necessity is the mother of all innovation. We had to tap some lines. We needed good communication technology to hear what other people are saying about us in our neighborhood. You know, it's a tough neighborhood. And those technology tend to find their ways with the people, with the IP outside to the commercial market, and find good applications for them. So we started great companies in ComEquip, and we were very, very strong in that segment for many, many years. And there was an IP heavy, tech heavy segment. But when you thought about Israel up until 10 years ago, you really thought about mainly that segment and some derivatives of it, right? Deep tech, communication equipment and communication equipment related, combination of hardware and software systems. That's what we're really good at, really hardcore engineering. What you're starting to see here is the proliferation of different subsectors in technology. So we have today some of the best companies in the world in e-commerce, born, raised, started from here. We have some of the best marketplaces, dynamic companies, born, raised here. We have some of the best mobility companies and some of the best mobility.
So we moved to more military-oriented segments to more civil.
Yeah, but it's mainly the proliferation of technology across many different subsectors of tech. And so when you thought about Israel, you never thought Israel that it will be strong in branding. We're looking at companies like Wix and Fiverr. These are companies that built on brands, right? We're really strong in branding right now. This is something that was never the case in Israel. And they go directly either to consumers or to very small businesses with broad distribution. So I think the diversity across different segments, the fact that we can say that we had e-commerce, fintech, cybersecurity, all these subsegments growing in the same year significantly, which other subsector is doing better or worse, I think is a huge testament to the diversity of segment and capabilities that the local ecosystem has today that didn't have 20 years ago.
Chemi and Gilad, you have a lot of experience working with entrepreneurs at good times and at challenging times. And at this point, we can already look back and recognize the companies that use this crisis in order to evolve and to become stronger and better. And my question is, what was the common denominator for these companies and what can be learned from them? Gilad.
Yeah, I think we're very fortunate to have a few, more than a few companies in our portfolio that we worked with that just navigated astonishingly well through the crisis and even flourished through it. Some examples, and obviously many of them have played on trends that are benefiting from digitization. A seminal example of that is Fiverr, right? It's a company that hugely benefited from what happened with COVID. People need to work online. Micha had the vision 10 years ago of seeing a trend that was inevitable, and Corona just came in and made an inflection point in the adoption acceleration of the trend of freelancers moving online. It's a combination of people want to work for themselves and being able to provide services online. But really, when I think about companies like Fiverr and Monday and other companies we have in our portfolio, it's at the end of the day, it's all about the people and the team. What they really did well is to seize the moment, to look at the opportunity and the challenge, and to try to figure out how they can navigate their company into benefit from the situation. They weren't afraid of looking at the challenge. They weren't thinking of the sky is falling. And I think looking at what these companies did through COVID that helped them to get on the other side and accelerated growth rate that were already very fast to begin with, I think it's admirable. And to have these kind of capabilities here, we always complained our entrepreneurs were very smart, techie, savvy engineers, but they're not the best managers in the world, right? We want a good management, we need to go to the US. It's not the case anymore. We have astonishing, great, highly experienced management teams here that are at par, if not better than any other management team in any other geography you can find around the world, from managing people to managing systems and processes and markets and go-to-market strategy and sales. We have all the capabilities here. We don't need to go anywhere else. And we look at some of the most successful companies that I've invested with, Wix, Fiverr, Monday, headquartered in Israel, management teams in Israel, thousands of employees in Israel, huge for the economy, and just makes me proud of doing well while doing good. So I think this is, to me, the essence is really the people and the managerial skill set that we're really honing in and growing in the ecosystem.
Chemi, your turn.
First of all, I would say amen to everything that Gilad said. Exceptional individuals that have a vision, that see a market trend that sometimes people are more hesitant, but they go with what they see, and they have passion for what they do. They are resilient. They dream big, and they have the intellectual power to navigate through the changes in the market. And I never accepted the fact that Israelis are not good managers. You have to remember that when we started to invest in startup companies, we were really living on an island. It was almost impossible to build a big company. We did not have enough venture money to support the companies. You had to go on a plane and travel a long distance to speak a different language, find a different culture, compete with local, as Gilad mentioned, take the guy to, or the person to a bar and have a drink and talk about your days in MBA school to close a deal. And not to mention the fact that you'd say, why do you deal with those guys from the Middle East, right? But now, when we got the opportunity to build really big companies, we see some entrepreneurs are becoming really stars, and some CEOs in our portfolio companies could run some of the largest companies in the world. I don't want to mention names, but we have about almost 10 unicorns in our portfolio, so all of them are really great. I would also mention the fact that when global enterprises set up a shop in Israel, their initial interest was really to get loyal, cheap, smart development force. But over time, they discovered that Israelis can build products, that Israeli can innovate and solve problems that cannot be solved in other places around the world, and they can manage and lead teams. And actually, many of the Israelis were promoted to significant positions in different countries. So we have great talent also for management. And this is why I'm so bullish about the future and about the next 10 years. I think we're going to see amazing companies coming from Israel.
My last question before we move to the audience questions has a lot of hope in it, that we are very close to the end of this pandemic and crisis. And how do you think COVID-19 will affect innovation, technology, and entrepreneurship for the long run after all of this is over?
So if you ask me, I would say the first thing is that we have to think about the fact that we are living a world of wars. And this is why I think innovation will not come necessarily from military. And we're entering a new world of global threats, and COVID-19 is a perfect demonstration that all of us are attacked. It forces us to collaborate. It forces us to think about how we deal with our own issues locally. But then we need to address global threats, and this is not the last pandemic. We haven't seen yet major global cyber attacks. We haven't seen things that will come up from climate change or from different challenges, inequalities around the world. By the way, in Dubai and Abu Dhabi, where I was last week, you found a country that completely focused on the future, completely understand that the world is moving to global threats, and they are doing everything in their power to meet those challenges ready and not be taken by surprise, like happened to so many people around the world. I think innovation will address global threats and not wars. They will be driven more by purpose than necessities. I think dollars that will be invested in companies will be better utilized to keep us safe in the world. And I think that it's going to be much more competitive, much more complicated, and much more demanding than anything we saw. This is why it makes it even more interesting.
Okay, Gilad, how is the world gonna look like after this pandemic is over? And what of all the things we're seeing these days is going to stay with us for many, many years?
Yeah, I think, we're seeing acceleration of major shifts right ahead of us. And some of these phenomena that we've been waiting for and said they're going to take a while to progress. If we talk about the digitization of the health system, you look at all the telemedicine companies and what they're doing now and the level of adoption in the different population. I think this is huge, right? One of the worries I always had about digital transformation of the health system was the level of adoption. Are the older population really going to sit in front of a doctor and a patient-doctor relationship over the web? And now we're seeing that it's happening for necessity, because of the necessity in the pandemic. So I think we're seeing some real shifts in consumer behavior, in the way that we behave to our employees. When we think about work from home, the work from home trend is one thing when you talk about the pandemic, but the other side of it is really what's the best work-life balance? How do we get the most out of our employees, not just in terms of productivity for the organization, but actual productivity within their lives, right? Those are real questions about that will eventually, I think, will lead to more prosperity, to more health, to more mental health, and to more success overall for us as a group. And I think exactly what Chemi said, looking at global challenges in the eye and understanding that we need to tackle this together, that it's not anymore one man's problem or one woman's problem. I think this is really, really unique. The last thing I would say that connects to kind of my slip of tongue just in the last sentence is also, I think, leveling the playing field. I think we're seeing with this move that Chemi mentioned, ESG investing, also in many different ways. The fact that things are moving to digital, I'll give a few examples. Fiverr opened their platforms to people with disabilities. We're seeing people who never thought they can get job offers, working for thousands of dollars a month and generating salaries of thousands of dollars a month over the web. Leveling the playing field in many different ways, if it's disabilities, gender, background, socioeconomical, every other way you're thinking about it. I think going digital, accelerating the trend is another way to close these gaps. If it comes from e-learning, if it comes because of the e-commerce aspect of it, or just because of the communication aspect, that it's not physical and it's immediate and digital, I think that's also something that keeps me hopeful when I think about the technologies and what they're going to bring to us.
Okay, so we have time for one question. Guy Navon, the head of Discount Tech, my counterpartner in Israel, asked a great question. And by the way, this is a great bank, Israeli bank to work with, alongside the American bank that I'm representing. And Guy is asking a question that makes sense for him to ask. What is the role of banks in developing high tech? How significant are they within the ability to develop tech in innovation?
Yeah, you want me to start, Chemi? Yeah, I'll start. I would flip the question and I would ask, what's the role of high tech to these banks? Right. And I think the way to think about it, I think what we're talking about here is really technology is not anymore an industry, right? Technology is everywhere. Right. If there is an industry that doesn't have technology, it's a dying industry. If you want to be at the forefront, if you want to see yourself 50, 100 years down the road still in existence and your legacy flourish, you need to be within the technology ecosystem. So the question really is, if banks historically saw themselves as the right partners to the industry, the industrial entrepreneurs when the Industrial Revolution was happening, and then they saw themselves as big partners to the media companies when the media communication revolution was happening, you need to sit down by the sidelines and say to yourself, this is a real revolution happening right in front of our eyes. how quickly can we get involved in this, and how quickly can we ensure as banks, as financial systems, that we are part of what's happening here, because otherwise we don't have a future. All these big companies, you see Airbnb in their IPO from last week, right? Airbnb is a real estate company, has zero assets. They own zero assets, and it's one of the largest real estate companies in the world. It's only digital, it's a marketplace. If you're not gonna see them as a partner when you think about real estate exposure as a bank, you're not gonna be in the real estate game. So I think the question is, how do we, when I put myself in your shoes as a bank, look at the tech industry? I think you look at it as in the same manner that you looked at the communication industry when it happened, or the industrial revolution. You just look at it as a new revolution that's happening right in front of you. You have to play a role, you have to be a partner, you have to open for them a business account, find ways you can add value, help them with leverage, help them with credit, help them with any other business relationships they can have. And I think it's of the utmost importance to be there early and start working with them and investing in these seeds, because that's the way you're going to grow with them.
Luckily, we do it already, both the Israeli bank and the American bank. Chemi, do you want to add on this? How important are banks within tech, or as Gilad said, within tech, which is everywhere?
Yes. First of all, let me say that Bank Discount is the best bank in the world and one of the better ones in Israel.
Okay, thank you.
But to be serious, I would say the following. First of all, I would recommend that you be adopters of new technologies, be partners for the entrepreneurs when they start their companies, and give them the chance to scale and use their technology, assuming it's innovative, as much as you can. I remember that 20, 30 years ago, when we would go to a bank looking for funding for a startup company, we would usually get a laugh. Most bankers will tell us, come with real businesses. We don't understand what are these startups. But when banks became dependent on technology, whether it's cyber or other applications or data or software or cloud or data centers, they became actually technology players. So number one, be great partners for young entrepreneurs. Start with them early and adapt their technology, become customers. The second thing is be a global partner because nothing local works well enough for companies that aim to go global. Try to be the best educator and advisor on financing for the companies. They are young entrepreneurs, they don't know much about funding and financing. They struggle so much with growth and getting their act together. The biggest challenge that I see in today's startups is that you have seed stage in terms of management and processes, but they're in growth in terms of the business. So help them understand what's the most efficient way to fund what they do and how to better use and retain the capital that they have so they can optimize the whole process of growth. If you do those things, I think that you will be a significant strategic partner for these companies and support the growth. Just understand that the world is focused now on growth. You need to support growth.
So our discussion and great event came to its end. Chemi Perez of Pitango and Gilad Shany of ION Crossover Partners, thank you so much. I'm Noah Kolb, the head of IDB Tech, the technology banking team at IDB Bank. Thank you all for joining us. Happy holidays, Chanukah Sameach, and all the best.
Thank you.
Thank you, everyone. Bye-bye.
Happy Chanukah.